the answer is just because bank rate, or base rate as most people know it, has fallen, this hasn't transmitted itself through to a fall in the cost of funds for most lenders. So if you look at retail funded lenders, for example, there's frankly a limit to how low you can push savings rates without losing the deposits to other lenders. And I can assure you that right now, banks and building societies will be alert to maintaining liquidity as a priority right now. And the Bank of England is aware of this, and that is one of the main reasons why they have relaunched a version of the term funding scheme that was due to run out in 2022, actually. This is a mechanism where they provide liquidity to some banks and building societies, not all of them, those who are eligible, at subsidised rates. It's a flat bank rate. And this provides both liquidity to them to make loans and allows a mechanism to transmit these low interest rates through to borrowers. Now, for non-bank lenders, cost of funds is set by the wholesale markets, or tends to be. And if anything, those costs have risen over the onset of the crisis as fewer investors have been around, and it's simply just supply and demand, really. So although bank rate has fallen, cost of funds has in fact risen for those lenders. And I think finally, some lenders will be using rates right now to dampen down demand for new mortgages while they fully implement remote working, digest new payment holiday rules, and assess sustainability of their businesses as the lockdown bites.
As Tony said, I mean, obviously the Bank of England rate also only affects banks' funding. And a thing that's worth mentioning here is that banks haven't been tested in the same way operationally in terms of working from home before. So even those that can access that liquidity, they may not have the operational ability to lend in as higher volumes as they have been over the last few years. So therefore, they probably want to stem the flow of business in so that they can just actually cope with an operation where workforces may be entirely working from home, or in some cases, they're only running at 70% staff, et cetera, et cetera.